Here are 7 real estate tax tricks that you can use, which 99% of people here in Germany don't even know about. I mean, there are lots of examples of people investing in real estate here in Germany who make millions. ImmoScout published a study last year that the number of properties which get sold on their platform for more than 1 million euro doubled over the last 5 years. On the other hand, there are also lots of examples of people who destroy their entire existence with real estate. Take this whole around René Benko and his real estate empire, Signa, right now. He was one of the richest Austrians with more than 5 billion euro net worth and owned like half of Munich city center. And where are his billions now? Pfft, gone. He's bankrupt. I'm not saying Benko is bankrupt because of taxes, but especially first-time real estate buyers make a lot of tax mistakes that significantly reduce their returns. For no reason. And that's why we will take a look at the 7 most important real estate tax tricks that everyone can use in this Perfinex real estate video. First, we need to understand that there are mainly 2 stages in the entire real estate life cycle where you can significantly improve your taxes. When buying the property, so which property you buy and how you buy the property, and when selling the property again. Anything in between leaves you with very little wiggle room. If you bought a property in the first place, there's hardly any way to optimize your taxes later on. Das Kind ist in den Brunnen gefallen, as we say in German. Let me know if any of you know what that means in the comments. So let's optimize your real estate buying process with tax trick number 1, selection of the right property for you. There are mainly 2 options. We'll talk about a third one later on, but there are mainly 2. Either you buy an existing building or you buy a new construction. An existing building is usually cheaper, but because it's older, it usually can't compare with a new construction, right? Well, it can if you renovate it. And all these renovation costs, if they are done in the right proportion, which we'll come to later on, are immediately tax deductible. Let's make an example and say you buy an existing building for 90k and invest 10k to make it fresh and modern. These 10,000 euro renovation costs, if done right, will be immediately tax deductible, giving you up to 4,200 euro tax benefits if your personal income tax rate is 42%. If you buy a new construction for 100k, so same investment as earlier, but without renovation costs, because what's there to renovate with a new construction, you get 0 euro tax benefits. So it seems like the existing building is better. But hold on a second. It's not so easy, because an existing building depreciates over 50 years with 2% each year, giving you 1,800 euro tax benefits every year, while a new construction depreciates with at least 3% per year, giving you 3,000 euro tax benefits every year. Why does the existing building not depreciate by 2,000 euro every year if it's 2%? Because the property is worth only 90k. You did write off the 10k renovation costs from your taxes already. So you cannot depreciate them and therefore get tax benefits twice. That doesn't work. And keep in mind that ground doesn't depreciate either. Only properties do. But we'll come to that later on. So, who should buy an existing building and who should buy a new construction? It depends on your personal income tax rate. If you make more than 67k a year as a single person or 134 as a married couple, you are in the 42% tax bracket. And then it's highly worth it if you buy an existing building which gives you immediate tax benefits from renovations. Let's say you make less than that and only pay 25% taxes. Then you better go for a new construction and stretch out the tax benefits, because these large one-off tax deductions like renovations are not as profitable for you as they are for a high earner. Talking about these renovation costs, I know what some of you are thinking right now.
I'll just buy a huge mansion for 1 euro, renovate it for 1 million, and then get mega rich with 420,000 euro tax benefits.
If you think that works, you should probably stop smoking marijuana, because Finanzamt says 420 to that one. If you want these immediate tax deductions from renovations, you need to keep them within the 15% barrier of the property value. Not the entire purchasing price that you paid, only the property value without the ground the property is standing on. So if you bought a property already, check the purchasing contract and see if the property was separated from the ground. If not, you already made the first big mistake that will probably cost you thousands of euros in tax benefits. If yes, you're probably a client of ours because we make sure that our clients get the best deals possible. And if you want to buy a property with us too, then you can book a free meeting with us right here. The next real estate tax trick is also a tiny little detail in the purchasing contract that not a lot of people know that could give you thousands of euros in tax benefits. Separate the furniture from the property and the ground in the purchasing contract. If you buy a furnished property, it's a no-brainer anyways. But even if it's an empty property with just a chair and a table, buy it from the owner and decrease the property price accordingly. That gives you two kinds of tax benefits. First, you pay less ground purchasing taxes because there's no ground purchasing tax on furniture. And second, you get a higher depreciation because furniture depreciates faster than properties do. Again, use some common sense here and don't misinterpret my words. I'm telling you tax tricks. I'm not motivating you to commit tax fraud. FBI, open up! Trying to buy a property for €1 with 100,000 euro furniture inside will not work. And you might want to consult a professional tax advisor if you're not sure what to do exactly. Before we come to the selling process, which will give you a lot of opportunities to optimize for taxes again, let's talk about two topics you guys throw into the ring every now and then in comments and in meetings. Should you buy a monument property, Denkmal in German, to save additional taxes? It depends on your personal financial situation, but probably not. It's true that Denkmal properties give you an insane amount of tax benefits from depreciation because you can depreciate the property over 12 years and not over 50 years. But that's the only benefit with lots and lots of downsides. You cannot renovate anything that you want, like with any other normal property. No. Denkmalbehörde will check exactly if your planned renovations are in line with the Denkmal law and if they will preserve the Denkmal status of the property. And you know how fun it is to deal with government institutions. So if you're a sucker for tax benefits, like me, I realize you find Denkmal properties exciting, but it's not worth the effort of dealing with Denkmalbehörde if you ask me. I'd much rather buy an existing property and use the one-off renovation costs that we discussed in real estate tax trick number 2. And the second funky idea some of you guys have is that you buy a property with a company, a GmbH for example, instead of buying the property privately. We made a video about this already, so check this out if you're interested to know the details. For everyone else, just here in short. Yes, holding a property with a company can give you various tax benefits. The biggest one probably being that you have to pay only 15% taxes on rental income instead of up to 42% taxes as a private individual. But, and that's what's mostly ignored, very similar to the Denkmal property, you cannot just take one positive aspect and ignore all the other negative aspects that come with it. Establishing and maintaining a real estate company will cost you thousands of euros every year. Believe you me, as a person who has 4 different GmbHs, 2 doing a commercial business and 2 just holding real estate and other assets. And these costs you have should be smaller than the tax benefits that you get, right? Otherwise it's all for North and just a waste of money, brain and time. The classical wombat. So definitely start privately and then start selling properties to your own real estate company tax-free after 10 years if you have a property portfolio somewhere in the low millions. Before that, a GmbH company is just a wombat. Now that we know how to buy the property the right way with lots of tax benefits, let's talk about how we sell the property with the most tax benefits possible. Let me introduce you to the Ehegattenschaukel. Many of you that are married buy their properties as a married couple, and that's fine, nothing wrong with that one. But if you want to save taxes, then the husband should buy properties on his own and the wife should buy properties on her own. This works also with your parents or your kids, everybody in a horizontal family line, but not with family members in a vertical line, siblings for example. And it's usually done within a marriage, and that's why we call it Ehegattenschaukel. Let's say spouse 1 buys a property completely on his own this year, holds it for 10 years, and then sells it to spouse 2. While spouse 1 has to pay closing costs in 2024, just like everyone else who buys a property, there will be no ground purchasing taxes when you sell to a family member, saving you up to 6.5% in closing costs. And let's say spouse 1 buys a property this year for 500k, out of which 100k is the plot. This will be important in a moment when we calculate the tax benefits. I hope that you still remember the ground does not depreciate. Only properties do. Let's say after 10 years the property value doubled, so spouse 1 sells it to spouse 2 for 1 million euro. What does this mean? That there's up to 1 million euro the couple has in their pockets now, completely tax-free. Depending, of course, if the property is theirs or if they still have a mortgage to pay. But even if there's still a 250k mortgage left, they would still have 750,000 more in the bank, completely tax-free. And not just that, the couple will also get 8,000 euro more tax benefits from depreciation because the property is worth more now. Now, there's probably one big question mark in your head right now. Where is spouse 2 getting the million euro from to pay spouse 1? Two options. From the bank, you just get a mortgage like everyone else, or the even better option, spouse 1 gives spouse 2 a seller loan, which will save the couple again thousands of euros in tax benefits. How so? Because spouse 2 can deduct loan interest from their taxes with up to 42% tax benefit, and spouse 1 only has to pay 25% capital gains tax on the interest. Do you realize how awesome that is? Man, this gets me so excited. I want to marry someone. Let me know in the comments if you're interested. Only for tax purposes, of course. And the last real estate tax trick: never keep your properties until the day you die and then let your kids inherit. Rather gift it to them while you're still alive. Here's the official table how much you can give to other people every 10 years. For your kids, it's 400,000 euros every 10 years, completely tax-free. That is much better than up to 50% taxes that we're seeing here in this table, if you ask me. And again, just like with the Ehegattenschaukel 1 tax trick earlier, if your kid buys a property from you, no ground purchasing taxes, higher tax benefits from depreciation, and the cherry on top would be the seller loan. And that concludes our list that will help you save thousands of euros while tweaking just little things here and there. Thank you for watching, and I'll see you in the next one.